Howdy, everybody. Welcome to Liberty Call. It is Thursday. Yes, I can never remember the day. Thursday, August 8th, 2024. Hope you're having a fantastical day out there. Pretty nice day here in Colorado. It's a little overcast, but it is cool. Gosh, I came up or walked out of the bedroom and the windows are open in the main area of the house. I was like, ooh, it's chilly. So after the last few weeks and fires and everything, it's pretty nice. So even though I get all sweat, you can see the paint on my shirt here. Battleship Gray. I've been doing some painting upstairs in the dining area I've been talking about earlier in the week. So anyways, like I said, hope you're having a great day out there. If you could do me a favor before we get started, if you could give me some thumbs up, a like, a share, subscribe, follow, and press the notification bell. All righty. Looks like markets were in a good mood today as opposed to yesterday where they fell apart in the later part of the day. No such tragedy this time. Starting out with the Dow Jones, it was up 1.76%, 683 points. So we're back, folks. Closed at 39,446. S&P 500 up 2.31%, 119 points. Closed at 5319. NASDAQ up 2.86%, 463 points. Closed at 16,659. The VIX was down 15.15% today. It's at 2363. Canada up 1.58. Brazil up 0.86 and Mexico up 0.39. Over in Europe, Germany up 0.29%, the UK down 0.27%, France down 0.26%, Netherlands down 0.18%, Spain down 0.39%, Italy down 0.28%, Switzerland down 0.32%, and Portugal down 0.08%. So other than Germany, everybody was in the red. Not a lot, but just a little. Russian exchanges both red today. MOEX down 0.89, RTSI down 1.59%. And the overnights, Nikkei was down 0.84, Australia down 0.23, New Zealand down 0.68. In China, the Shanghai was up 0.04, the Shenzhen component down 0.04, China A50 up 0.36, DJ Shanghai up 0.04, Hang Seng up 0.08, and the Taiwan weighted when it closed on the 7th was up 3.87. I don't know if I said that yesterday. All right. So those are today's markets. So again, jobs numbers were better today, which we'll cover in a few minutes. So I guess that gave everyone the go ahead that, hey, everything's fine again. It's weird. 24 hours, from one day to the next, people are jumping out of buildings one day, like the crash at 29? Yeah. And, the next day, everybody's, bringing wheelbarrows full of cash to the stockbroker. Strange times, folks. And then, you got the political stuff, which that is all that's on my TV right now. I intentionally watch a business channel because I don't care about the politics. The mudslinging and I think the left and the right are they're awful. They're both terrible. Granted, I find one side worse than the other, but I'll keep that to myself. Anyone who knows me well can probably tell which side I lean towards. All righty, let's get into the market recap. U.S. stocks rally as better than feared jobs data cool recession jitters. U.S. stocks surged on Thursday as labor market data eased fears of an impending recession. Now, it'll be next month, folks, not today. The latest data revealed that 233,000 Americans filed new applications for unemployment benefits for the week ending August 3rd. This was below the expected 241. So, wow, 8,000. Again, we're back in business, folks, and a significant drop from the revised 250,000 the previous week, which had marked an 11-month high. This unexpected decline in jobless claims provided a positive signal for labor market conditions, mitigating concerns about a weakening job market following last week's disappointing non-farm payrolls report. Well, the last article we're going to talk about will kind of get into whether or not these numbers actually jive. Stifel noted, quote, the unexpected drop in jobless claims offers a welcome positive indication of labor market conditions, softening concerns of more precipitous weakness in the aftermath of a somewhat disappointing jobs report, end quote. A Wall Street rebound. The major Wall Street indices had been experiencing steep losses in recent weeks, with the NASDAQ entering correction territory amid growing recession fears spurred by weak labor market and business activity readings. However, Thursday's data helped alleviate some of those fears, leading to a rebound in stocks. Investors are also keeping an eye on comments from Richmond Fed President Thomas Barkin for any insights into the Federal Reserve's next moves. Some earnings reports continue to drive market movements. Eli Lilly saw its stock soar 9% after The company raised its annual profit forecast with sales of its weight loss drug Zepbound surpassing $1 billion in a quarter for the first time. So we're going to see a lot less fat people, right? I doubt it. Bumble experienced a 31% slump as the online dating service cut its annual revenue growth forecast, causing concerns about its growth strategy. UBS remarked, quote, "The path to returning to year-over-year revenue growth remains unclear, which in turn provides limited valuation support for the share price," end quote. Warner Brothers Discovery fell 9% after reporting a $10 billion quarterly net loss and a significant $9.1 billion write-down of its traditional television networks, reflecting a rapid erosion of the cable business model by streaming. UBS lowered its EBITDA forecast for 2024 from $9.5 billion to $9.1 billion, citing potential loss of NBA rights impacting advertising and affiliate revenue. If I could stop there, I think I saw yesterday that Amazon Prime is going to do NBA. Don't quote me on that. I think it was a headline I saw either it's on the TV or in the business section, or I don't remember which. But yeah, that could be big because I know TNT's had the NBA for, 15, 20 years, with Ernie and Shaq and Charles and all those guys. So not good because people love sports. All right, jumping back in. Under Armour jumped 19% as the sportswear company's quarterly earnings exceeded Wall Street estimates, and its full year earnings guidance also beat expectations. So, again, we, to kind of sum things up here, we have, a better than expected jobs report, and everyone's, woohoo, just jumping around. So, I mean, again, it's the roller coaster of emotions with the stock market. And, it makes me chuckle. Everyone thinks from one day to the next, it's either the worst or the best. And it's like, there's no reason to get all panicked about anything. All right, next up, let's dive a little deeper into the job stuff. U.S. Jobless claims seen at 233,000 last week, below the expected 241,000. That's a terrible headline. The number of Americans filing new applications for unemployment benefits dropped more than anticipated last week, further complicating the outlook for the labor market as the U.S. Federal Reserve considers its monetary policy stance. For the week ending August 3rd, initial claims for state benefits decreased by 17,000 to a seasonally adjusted 233,000. This figure was below the economist's forecast of 241. The previous week had seen claims at a revised 250,000, the highest level since last August. Meanwhile, the number of people receiving continuing benefits after their initial claim, known as continuing claims, rose by 6,000 to a seasonally adjusted 1.875 million. The Federal Reserve has kept its benchmark overnight rate or interest rate with a range of 5.25 to 5.5 for the past year. And Fed Chair Jerome Powell recently remarked that while labor market changes seem, quote, broadly consistent with the normalization process, end quote, policymakers are vigilantly watching for any signs that suggest a more significant shift. The most recent jobs report indicated a slowdown in U.S. job growth in July, with only 114,000 jobs added, and the unemployment rate climbed, it's not that high, to 4.3%. This data has increased expectations that the Federal Reserve might start easing its monetary policy in September, possibly implementing a significant half percentage point interest rate cut. Now, I wouldn't get so excited to think that's going to happen. Again, everyone's being a little too, look at the bigger picture. I mean, look at, and in my opinion, I would pay the most attention to the consumer spending numbers. When those start to dip over, then I would imagine then we'll start to see some contagion into the employment numbers and really start to see some acceleration. But as long as people are spending, the companies are going to continue to keep their staff, as long as they can afford it, they'll keep them. But, as far as once consumer spending really starts to dip, you're going to see, my personal belief is that we'll see start to see a major downturn in the employment situation. All right, last up from Zero Hedge, article titled "Numbers Aren't Jiving to the Real World," and that's in quotes. Huge revisions leave traders questioning Biden admin's energy data. All right, a year ago, we highlighted significant revisions made by the Energy Information Administration, the EIA, the statistical arm of Biden's, whoever's in the White House, Biden's Department of Energy, leading to questions about the accuracy of initial data. Fast forward a year, and such revisions across multiple government-supplied macroeconomic data items have become commonplace and statistically noteworthy for their negative trend, implying initial data was overly optimistic. Notably, payroll data has seen downward revisions in 7 of the last 10 months, and consumer confidence has been revised lower in 9 of the last 12. This trend has become so pervasive that even mainstream media has acknowledged the inconsistencies. Reuters recently reported that substantial revisions to U.S. oil consumption data have unsettled market participants. The EIA's monthly update indicated record high U.S. oil consumption in May, conflicting with weekly updates that showed struggling oil and fuel demand. The EIA attributed the discrepancy to preliminary readings that overestimated gasoline output and undercounted exports, acknowledging the weekly estimates are less accurate than the monthly data, but should still indicate general trends. Interestingly, the initially reported weak demand figures helped lower crude and gasoline prices amidst rising inflation and economic challenges under Biden economics. However, market reactions to revisions are less pronounced compared to initial reports, causing market participants to question the reliability of the data. Tom Clausa, head of energy analysis at Oil Price Information Service, expressed skepticism, noting disbelief among fuel marketers over the May revisions. A trader from a major commodities distribution firm warned that such changes could harm consumers as fuel import decisions rely on EIA data. Gas Buddy analyst Patrick DeHaan echoed these concerns, suggesting that skeptics of the EIA's numbers might be gaining credibility. And if I could stop here before I'm done, we talked about this, I think, last week in reference to the numbers out of OPEC versus the EIA, because the EIA is saying everything's fine, and OPEC is like, well, we know our numbers are a little bit different, and so it's like, well, who's going to give as far as having the more accurate data? So again, I don't know. I can't say I don't generate this data, so I can't tell you which side is right or wrong. All right, finishing up, the situation raises doubts about the reliability of macroeconomic data, especially during an election year, or any year. Prompting market participants to question the version of reality being presented. So anyways, yeah, the whole problem with the, coming out with, overly optimistic numbers, is like everyone, hey, things are great. GDP is awesome, whatever, massage numbers that it might be. But, the problem is that the corrections or the revisions, when they come out, it's not a headline at that point. It's, on page 12 underneath, information about, a lost cat or something. I don't know. But anyways, that's the big issue, is that, the headline number is what kind of sets the tone for the, because so much of trading is based upon emotion and, what we think is going to happen or what we perceive as real life data. And if, the data is not real, it's kind of like putting numbers into the financial planning software I use. If, the clients give me BS and, say, hey, well, this is what I make and this is what I can save and blah, blah, blah. And then I, generate the proposal and then come back to them and say, all right, well, you're already saving enough and, it looks like you're on track. And then, behind the scenes, they really weren't doing that, anyways. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. I hope everyone out there has a wonderful evening. Me and my main man, Jake, can't really see him back here on the floor. We're going to go play some ball and probably do some more painting since he is my supervisor currently. And we'll hopefully have a fantastic evening. No baseball, unfortunately. So that means the wife gets the TV and I get to listen to podcasts and read news on my phone. So, all right. Well, hope everyone has a great evening, and I'll talk to you next time. Adios.